As I said, here are a few facts for the balances on the sorry. Before that, let me just explain to you what the balances on each side of the sales ledger control account represents. So there's the sales ledger control account, as I said. Sales ledger control account. Okay. Now in that, there are two possibilities of the balances. First of all, there's a debit balance. This represents the money owing by the debtors. And the credit balance represents, which is very rare, money owing, I'll just put some hyphens over here, to the debtors. This thing is very rare, it rarely happens. Most of the time the debit balance is there. So anyway, this was just a little fact which I wanted you to know about. The last and the final thing which you're going to do for the control accounts are the contra entries in the control account. Okay? So like how, as I said, there are something known as contra entries. So basically I'm going to tell you how to record these contra entries through an example. Most of the time it's from the sales ledger and the purchase ledger, as I said. So let's start. So contra entries. It's actually pretty simple once you break it down. I took some time to understand this, but it's pretty simple. So anyways, first of all, let me just tell you a few things about contra entries. I think I explained it to you earlier also. They are known as inter-ledger transfers or setups. I'm not going to write it down again. And for this example, or most of the time, the businesses have purchase ledger for contra entries. And the sales ledger. Okay. And as I said, these two are set off. So basically it's like calculating the difference between their balances owing to each other, and whatever the balance is, it is settled by one business issuing a check to the other. Okay, so that is the contra entries, as I said earlier. Now I'm just going to show you, as the final act for this video, how to write these contra entries. First of all, there's a sales ledger. Sales ledger is there. Inside the sales ledger, there's a debtor account. I think that is the smaller one. There's this debtor account. I hope you know that all accounts have date detail amount again, but I'm not going to write them because I need some more space. So I'm just going to write debit and the credit side. So first of all, on the debit side, in the sales ledger, there is a debtor account, and from the sales account on the debit side, the business has sold some particular good to the debtor, so obviously it will come inside the debtor's account. So on the debit side, let's just say this is amount XXX again, depends on whatever it is. Oh no, I think I'll need to use proper amounts. So let's just say there's this $190, okay, and you just finish off this account, okay, and then you write $190 for the total again. And on the credit side, as I said, the customer and the purchaser must have been the same person. So, and therefore, we are going to write purchase ledger over here. and after that we're gonna write the same amount because we're setting the amount off, right? So $190, and you close the account. The debtor account is completely closed off now. Now after that comes the purchase ledger account. Purchase ledger, this is the purchase ledger. And the creditor account. On the debit side of the creditor account comes the sales ledger. The same amount, as I said, this purchase ledger, $190 comes on the debit side of the creditor account. So I'm gonna write sales ledger $190, and below that, as I said, the remaining amount is settled by one business issuing a check. So basically the difference must have added up to $130. So the bank has been issued a check of $130, and both of these total to $320, because of which the purchases have been made of $320. So that's how you do a set of and contra entry for the sales and purchase ledger. Okay, so this is the end of the control accounts. The next time we meet, I'll be explaining to you incomplete records. It is a very interesting chapter and I hope to get to know you. Please subscribe to my channel and I'll meet you next time.